Okay, today is Quad Witching, and we have a special guest, Adam Johnson from Bullseye Brief, with us today. Adam's a fundamental analyst, and a good part of this room follows his work. It's exceptional fundamental research. Adam, why don't you tell us a little bit about yourself and your process?
Oh, thanks, Judd, and PAX and everybody else. Thanks for having me in here. It's pretty cool to be in a room with a bunch of guys looking at all these things that admittedly I don't understand, and that's the beauty of it. As I said to PAX before this began, I'm a fundamental analyst. I'm not a technician, but I have immense respect for the discipline that goes behind all of the work that that you do, Judd and PAX and the whole team. What I do is very different. I read company transcripts. I figure out what a CEO or CFO is saying about his or her business. I run cash flow models to try to project where I think a company's earnings are likely to go. I look at the gross margins. I try to figure out if there's pricing power and who else is in that business. What it all boils down to for me is American ingenuity. That is my North Star. I'm looking for people and companies that transform the world. And most of my positions are in healthcare, and I use that term broadly because I've from time to time had some, big obvious names like AbbVie or like UNH. But really, when I talk healthcare, I'm looking more at med tech companies like Livongo that use artificial intelligence to turn diabetes and chronic diseases into manageable conditions, or a company like Health Catalyst that uses AI to help hospitals figure out the fat in the system and provide faster service, or a handful of my biotechs. I know some of you guys follow them. I look at technology, exciting companies like Lumentum, which leads optical networking. They also make the 3D lasers that enable facial recognition in every Apple device. You start to get a sense as I talk about the names of the kind of stuff that excites me. That's where I make my money. I've taken some huge hits. I don't even want to tell you how much I was down on the low, but for me, it's about alpha. And today I'm up 6.5%, 7%, with the S&P up 1%. So it cuts both ways. As far as how I find these names, I do an immense, probably inordinate amount of reading. I go to as many conferences as I can. And then I actually like to run a few screens on the Bloomberg terminal. Those screens might include cash flow growth. It might, on occasion, take into account how many analysts are following and how much upside they see. That might flag an interesting opportunity to me. But really, what it comes down to ultimately is sort of pulling on a string. In other words, a big picture theme, smart cities. What exactly does that mean? Well, it means 5G. It means putting more antennas around the world. It means smaller devices that enable near-field communication. Smaller devices. How do you make smaller devices? Well, actually, the same equipment that's used to make semiconductors is very good at making really small stuff. Well, who makes that? MKSI Instruments, ticker MKSI. Stuff like that. So you see what I mean? It's pulling on a string. I wish there were some sort of formula that were obvious or some sort of matrix context. In my case, there's not. I've been trading for a long time. I thought I was going to be a doctor. I went to Princeton. My 101 prof, Econ 101 prof, was Alan Blinder, former vice chair of the Fed. He told me one day after class, I don't think you should be a doctor. I think you should be an economics major because you seem to like economics. You're the only one who asks me classes every day after ask questions every day after class. And so I wrote a senior thesis on mortgage-backed securities, creating an index for them. I was hired by Merrill Lynch, traded mortgage backs in the late 80s, then went to Louis Dreyfus, traded oil. I thought stocks were more interesting as well as options and went to Furman Cells, was there for 10 years. We sold ourselves to ING and eventually became part of a little hedge fund with the former CEO. Went to Bloomberg at the crisis in 2008 because I was a guest and they asked me if I would consider joining TV full-time. I did. I missed having a P&L. I wanted to get back to picking stocks, which is what I do. And so I left Bloomberg and launched Bullseye 4 years ago. And I made 49% last year. This year, I'm having a toughie. I was up 10% actually a month ago. And, I've eaten some pain, but my average holding period is over a year. And I generally run a portfolio of 25 to 35 names. I know a bunch of you guys are subscribers, and thank you. I run a little bit of money on the outside as well, which is all my names. And I think that is probably enough from me. I could talk all day, but it's not that interesting.
I don't know about you, but I'm interested.
Yeah, we all are.
Well,
Adam, this is Pete. When the market turns, when people want equities, I love your list. There's so many good names, good, interesting names, and I myself really prefer to have a fundamental backdrop before I buy. I just won't buy off a technical picture. I really need a fundamental. So you're helping me out a lot.
Oh, good.
That's my plug for your product.
Wow, thank you.
And as you've been talking, I've been running through all those names you've just been mentioning and putting up the charts.
Oh,
so
cool.
A lot of them are already breaking out.
Oh, please, more like that. Yeah, I mean, I'm looking at a couple. Okay, Aptiv. I'm looking at my screen right now. The ones that are up most: Trillium, 20%; Aptiv, 17%; Smile Direct. I know people think I'm crazy. Maybe I am, but that's up 17%. I love to deal with Walmart. Delta, which I sold way back, is having a very good day. I mean, there are a bunch of names. Uber, I sold way back. Maybe I should buy them back. But Aptiv, pull that one up. APTV. This is a company that came out of the old Delphi, which made drivetrains, DLPH. Not a great company. It always traded about 6 or 7 times earnings. It was just not that exciting. But Aptiv, they spun off about a year ago, and it's electric harnesses for electric vehicles, and then all of the circuitry for even internal combustion engine companies. This stock was $98. My target was 105. Like an idiot, I didn't sell any. I always sell half a position when it hits my target. I never sold it. It's 105 and got into the 30s, and it's coming roaring back. It's 47 and a half to.
It's got a nice double bottom that put in Wednesday, Thursday.
Yeah.
So up to about 51.28, and then it's going to make a decision whether you're going to get another 10% or not.
Got it. Got it. Of the names that I gave you this morning, or the ones that I've mentioned, I don't know, MKSI, maybe another. Is that worth a look-see?
That one hasn't gone yet.
Okay.
Light's taken off.
Yeah, Light looks great, right? Lumentum?
Yeah, that looks good.
Oh, guys, I freaking love this company. Okay, it trades at somewhere around 10 times earnings. I mean, who knows what E is right now. But the CEO 2 weeks ago told us on the call, he said, we've already moved our manufacturing largely out of China and into Thailand. It's very secure. He said the manufacturing that's in Thailand, or rather in China, is completely secure. All the employees live in dorms that are completely sequestered. They said the cost is about 15 to 20 million, which is de minimis. Lumentum makes lasers that enable optical networking, okay, which is part of the whole 5G build out, because you have to move packets of information much, much faster. And you can do that with light beams as opposed to copper wire. That's point number one. And then point number two, a third of their business now is facial recognition. Lumentum is in every single Apple device. It's what enables facial recognition, the 3D sensing. And I don't know if you guys have seen that there are a number of hospitals now that are combining AI, artificial intelligence, with 3D sensing to screen mass groups of people as they come into the emergency room, and then they flag which people look sick and to what extent. That's fascinating stuff. Now, no hospital system has named Lumentum, but Lumentum is the world leader. They're number one. No one else can even touch them. So that is a name I'm really excited about. Ticker is LITE.
You could buy that against today's low.
Okay. And just as a gut check, because I always like to make sure I'm not drinking my own Kool-Aid, even though I generally do. But just looking at the other analysts out there, who cover this name. There are 16 analysts who follow Lumentum, 15 ready to buy, 1 rates it to sell. Their consensus target is 96. The stock is 70. I think it probably goes over time significantly higher, but most of these guys are trying to get II rankings, which means they can only go out for 12 months, hence the 96 target instead of, something like 150 or whatever. And just so that you're clear, I know you guys are more focused on technical levels, but again, if technicals and fundamentals line up, that becomes powerful. The stock is trading at 13.5 times, 12.5 times next 4 quarters. 12.5 times. That's pretty darn cheap. And let's just compare that, by the way. I'm doing this all on Bloomberg.
Yeah, I mean, the low this month, the low the other day was just awesome.
Yeah.
It spiked into the breakout bar from last October.
Oh, cool. I'm just pulling up the Bloomberg. Historically, this thing trades at a forward multiple of 17. Okay, that's over the past 10 years. Lumentum, average forward multiple 17 times. And it's trading right now at 12.5. So 12.5 up to 17 is what, about another 30%? Oh, okay, fine. So that gets you up to it gets you past that $96 target. That probably puts you at 110. And again, that's just the average.
Yeah, another one of your picks, United Healthcare, looks like I can go at least another $10.
Yeah, I would think. The rule on United is you buy it in the low 200s and you sell it at 300.
Well, you got your 200.
Yeah. By the way, it's the largest insurer in the country, about 100 million insurees. So call it the equivalent of, a third of the population. And what they're doing better than anybody else, because they have so many insurees and they have, let me see if I can get the number right. What is it? 6,500 hospitals, 65,000 pharmacies, and I believe it's 6.5 million doctors, if I have those numbers right. They're putting all of these entities on one platform so that they can share data, and that's the holy grail of healthcare right now is using data to encourage preventative care and ultimately lower costs and keep people from getting sick in the first place. So that's fundamentally why you want to own UNH.
All right.
Similar story with HCAT then, Adam.
Oh yeah, Health Catalyst is a really cool company. So I was just writing that up. Yeah, HCAT. I bought a little more of that the other day. I mean, it was driving me freaking crazy to see these beautiful names.
That's a huge bottom on the 18th with an ORH day.
Oh,
yesterday
good.
It held and took off. That's nice.
Oh, good. Yeah, Health Catalyst is a really cool company. It IPO'd back in July at around 20. I think it was $26. Got as high as 50, and came down. And this is a company that is really a technology company. Well, how do I say it? It's a tech company disguised as a healthcare company. It's not healthcare at all. It's a bunch of data scientists who go to hospital networks, attended healthcare, for example, and they start running the number. They do what I do. They pull on strings. Like that book Freakonomics, where they find all those weird correlations, and come out with these interesting conclusions. That's what these guys do. So, for example, there was a healthcare system in the Midwest that had an inordinate number of staph infections, and people were dying. And what they found was that because there's data on all this stuff, that this particular healthcare system wasn't screening people frequently enough, number one, and number two, it wasn't creating adequate security interfaces between staff and patients and all kinds. Anyway, they just found all that in data, and then they were able to reduce the number of deaths by something like 23%, and their insurance costs went way down, and they got paid big sum of money. So Health Catalyst basically has all these term contracts where they get paid quarterly by all these systems. So the cash flow is very steady, and it's artificial intelligence weaving its way into healthcare and improving care and lowering costs. It's just a wonderful company.
Wow.
By the way, 9 analysts cover it. 9 of them say buy, and their average target is $48. That's a double from here. Again, it IPO'd at 26, $2 above here, got as high as 50 within the first couple of months. So, there's plenty.
That 26 is an interesting level because that's where all the daily oscillators come in. That's the opening range of the stock. So whatever, I like to use those numbers as big pivots, Adam. So whatever it does below it, it'll do above it.
So you get the mirror image, in other words?
Yeah. So if you get a couple of closes above 26 this time, you'll get a really big swing back up.
To like where?
Well,
high 30s?
Yeah, $12. So yeah.
Okay. FYI, enterprise value, which is, the market cap plus the total debt, less cash. Enterprise value divided by revenue is about 3.8 times. And, an artificial intelligence company generally trades at like 7, 8, 9 times. So this is, that just on sort of relative value, this gets you up into the 55, 60 level.
Well, I can see that.
So Adam,
That's how it'll move. Go ahead.
Adam, you're focused on med tech and biotech by your own admission, right? That's what.
Well, yeah, because I thought I was going to be a doctor.
Oh,
But
okay.
med tech. Well, I'll give you a few other names: NXPI, NVIDIA. Very exciting. The 2 N's. Corvo. No longer.
Hang on a second. We're going to go through them one at a time. NXPI just is going to struggle here at $83.
Oh, really? Oh, that's a shame.
Okay, what's the next one?
NVIDIA. I know that's one you already look at.
Yeah. NVIDIA's broken out. I mean, it put in a nice low the last couple of days, consolidating around the 200. That can easily go another $20.
Yeah. I've been doubling. That's a former Bullseye name, and I made some money on it last year. There's just so much I want to buy, but I'm already on margin right now. I'm up to 107%. That makes me a little uncomfortable. So, and I kicked a few names out in order to concentrate my bets elsewhere. I kicked out the market names. I think we should probably buy Bank America here, trading at 7/10 a book. But again, I'm not a value guy. I'm a growth guy, so I probably shouldn't be trading that. I had it just because it was a market name, and I thought that's stupid. Go. Stick with your knitting.
Yeah, yesterday we I was looking at those banks, and I like Fifth Third, Northern Trust, Wind Trust. And I'm not sure that they're just not trades.
Yeah, what do you think of Zion? What do you guys think of Zion? Zion. That thing's building a really nice base. It's the biggest, largest, oldest bank in Utah, fastest growing state in the nation. 2 quarters last year, that bank did not have a single non-performing loan, not a single one. And this thing has gotten demolished from 55 to 27.
It's just bouncing around the low here. It's trying to get. When you see the recording, you're going to see that it's trying to go sideways back to its momentum level, which today comes in at 2870. So I'm not sure how long it goes sideways before it breaks out. So it could be a little bit longer.
Yeah, I'm not long it now. I stopped myself out. I think around I think it was around 35, and I couldn't believe I was selling it at 35. I was so upset, but it's 27.
It's all right. You're going to get it back again, and you just have to wait a few days for that one.
I'm not long it now. Yeah.
Hey, Adam, do you have any insight you could share on the course of medical technology addressing the virus and the therapies and the vaccines and how that might play in the resolution of it?
Well, everyone is talking about Gilead because Gilead has a drug that's already being tested, which has worked in some viruses that had a similar structure. So, if you were looking to play, one name in particular, that would probably be it. The ticker, by the way, is GILD.
Yeah. I've got it up, Adam. I mean, that spiked yesterday on the news.
Yeah.
And you have to wait for that to come back down again before you can get in. You can't buy it here.
Yeah. Now, I had on the podcast 2 weeks ago a CEO from a company called Dyadic. The ticker is DYAI. This is a very interesting company that uses, it's gotten crushed. It's down to 4. Yeah. They use, it traded as high as 8. I haven't been following it. I just had the guy on because he's an interesting guy. That's been all over the map. Technically, it looks like a disaster. I don't know what the news flow is, but.
Well, it had a stranded close on Wednesday and a big rally.
Yeah.
I'm not, where did this thing open up at? How long? Oh, the opening range of this thing is what? Is 375. So it has to stay above 375, period.
The only reason I mention it is that this guy just signed a contract with the state of Israel. Israel is developing its own vaccine, and they need a way to produce it. And this company has a unique cell line. If you want to create protein quickly, you need a way to grow it. And one way to do that is using fungal cells. So you basically take a fungal cell, you zap the existing protein in the nucleus and replace it with the protein you want to create, and then you just let the fungus go be a fungus, because a fungus cell will double about every hour. So you can create vast amounts of protein by utilizing fungal cells. And so the Israelis may have a vaccine. They're testing a couple different versions, and when they zero in on the one that they want to use, they'll basically give it to this company and say, go produce it. And in the space of several days, they'll be able to produce thousands of vaccinations. So, and then of course it has to be tested. But I don't know. I only mention it because you asked the question, and it's not a stock I've ever looked at. I just had the CEO on a couple of weeks ago because I met him at the NASDAQ, and I thought, oh, this is American ingenuity to a T, and it's apropos.
So and also just kind of like generally, I think that the public's attention's on biotech sector to rescue the world, from this crisis, and I think that probably bodes really well for sentiment and for the sector this year. What do you think about that comment?
Yeah, it certainly highlights biotech as a place of great promise. And, it excites me so much. Companies that are using the immune system to fight cancer. I mean, wow, what a concept. Trillium, TRIL, is one example. That's a new name. It spiked up to 8. It's like 3 today. It spiked up to 8 last week because company is buying one of their competitors called 47, FVSN, which uses the same indicator. Cells communicate with these indicators. They have a receptor on the cell, and then proteins in the blood see that receptor and say, oh, you're a good cell, or oh, you're a bad cell. And then, the leukocytes go after it. So cancer has figured out how to mask itself and look like a good cell. So it projects these little things that say, do not eat me, I'm a good cell. And so the leukocytes keep on swimming. But immuno-oncology, the study of using the immune system to fight cancer, has figured out what some of these receptors are, and it turns them off so that cancer looks like cancer, and then the body can fight it, which is pretty neat. Trillium's a good example of that. Wrapped, RAPT, which is way down, is another good example of that. There's some pretty exciting stuff. And I've got a couple. The three A's: Aurinia, AUPH, Applied Therapeutics, APTH, and Allakos, ALLK. All right, those are the three A's: AUPH, APTH, and ALLK. Each of those biotechnology companies has just announced within the past several months highly successful phase 3 trial data, phase 3 being the pivotal data, which then enables you to make an application to the FDA and get approval, and then go commercial. And they've all moved up significantly, but they've all backed way off. And I think
Arena's the one that looks the best.
which does?
Arena.
Yeah, okay, AUPH. Yeah, these guys have figured out how to not only treat lupus, but actually, in effect, keep it in a bottle and make it go dormant, specifically for people who suffer from a type of lupus that manifests itself within the kidneys. It's extremely painful, very debilitating, and can lead to kidney failure. There is no other drug that can do this. So
I got a question for you here too.
Yeah.
One of the guys are asking about Guard Health. Do you have any info on this cancer name?
Garden Health?
Yeah, GUARDANT. It's GH. This is a symbol.
I don't know it.
Okay.
But maybe it should become a bullseye pick. Maybe I should do some work on it and get to know it.
I think that was a name that Ira threw out a couple of months ago. So it's just stuck in somebody's head.
Got it. No, I thank you for the heads up. I'll try to get to know it. Generally, when a biotech has gone up into the 70s and 80s, the genie's out of the bottle, so to speak. And it's just harder to make money. Like, for example, Obsiva, OBSV, is down in the twos. My target's 25. There are two $40 targets, one $30. This company does something very exciting. It has figured out how to control two conditions that 1/3 of all women in the world face at some point in their lives: endometriosis and uterine fibroids. Endometriosis is excessive bleeding. Uterine fibroids are growths where collagen in the muscles starts to harden, and it's debilitating. And really, the only treatment has been surgery or just painkillers. And this company has, Obsiva, OBSV, has figured out how to A, reduce bleeding, and B, shrink fibroids. They have about a 90% success rate. They just reported interim phase 3. They'll be reporting final phase 3 in June. And then they're likely to file a new drug application first in Europe, and then probably next year in the US. The stock is way down because they had to suspend their phase 3 IVF trial. But IVF was never supposed to be the reason you bought this. So Obsiva is very exciting. The other neat thing about this company, unlike
put a 265 alert on your screen.
265?
Yeah.
Why? If it trades above there by more?
Then the worst is over. It looks like it's trying to bottom, but it'll take probably over 265 to really get going.
Got it. Yeah, and just one more comment on Obsiva, OBSV. Unlike every other company that is trying to deal with these two issues, uterine fibroids and endometriosis, their solution does not require what's called add-back therapy. In other words, you don't have to give women hormones as a result of this condition. That's called add-back therapy. You can, and in some cases, it's helpful and enhances the drug, but you don't have to. And anytime you can avoid giving women excess hormones, that's better, because it really wreaks havoc with the system and has a cascading effect across some of the other organs. So Obsiva, yeah, I just love it. I really do. I think I can probably ultimately, and it's going to take time, 12 to 18 months, but I think I can probably make 10 to 15 times my money on this one. So, I'm keeping it small, but that you only need one or two of these in a given year, and it makes your whole year.
Well, you've had a lot of them.
Yeah, I've had some good fortune.
I mean,
I've had some
Weight
blow ups.
Watchers. I mean, would you buy that at 13 and sold it at 100?
Which?
Weight Watchers.
Yeah, that's back down to $10. Yeah.
Nobody's eating now, so.
Well, but I appreciate the nod on that, but I got back into it in the 40s, and so I made 10 times my money, but so far this year I'm down 75% on what I bought back. That's a great company.
All right. Any of you guys have any other questions for Adam? I mean, this is fabulous.
I hope you don't mind. I've just been kind of talking.
No, everybody, we love this stuff. I mean, this is, this is the only room in that exists where you can come in and talk about stuff. And, we have RIAs and traders, and people will push back on the idea.
Oh, whoa. New York Governor Cuomo, 100% of workforce must stay home. Ah, shit. He was saying he would not do that.
At Chicago, Adam, I think I said it earlier. Chicago's going to announce today at 2:00. So I assume that the state is going to follow.
Yeah. Oh, that sucks. I'm at my office right now. I hate working from home.
Yeah, I've been doing it a long time. I'm used to it now.
Yeah, well, we like working from home because we can be in our smelly bathrobes.
Right. Well, let's see if the rally holds with that, because that kind of puts the kibosh on.
Yeah, that's pretty bad.
Yeah.
So Adam, I trade futures. So I trade. I the way that I execute my trades and everything is very different. But when we're in a downturn like this, and you're battling, how do I put this the right way? How do your emotions come into play? With your portfolio and in your decision making? Then I know that's a very big issue for traders that I'm working with. And I just kind of wanted to get your take on it.
Yeah. So on every position before I buy it, and by the way, I rarely short. I was short Boston Properties, but I just made a little bit. I'm an optimist. I'm a growth guy. I'm not good at taking the negative side of things. So I always set an upside, but I also set a downside, what I call an alert. Now, alert is not a hard stop. If something trades through my alert, it doesn't. Oh, look at that! Wow, Dow just dropped 160 points.
Yeah, I'm short. I sold more S&P right before we started talking right out of the opening range at 24.13.
Good for you.
Paid for my trade. Now I've got a free trade on, no risk on my shorts.
Right. Good. So an alert for me is and generally alerts are down 15 to 20%. And it basically is a moment where I say, this is not working. Has anything changed? Am I missing something or not? Very rarely I will buy under an alert. I will on occasion, if like in this craziness, it's why I'm on a little bit of margin right now. I've been adding to some of the really distressed names that it's a market situation. Some of these biotechs have absolutely nothing to do with what's happening in the world. I mean, like Arenia's trial on lupus has nothing to do with trade, tariffs, or anything like this. So if the stock gets knocked way down, I'll add some more. But as far as risk management, I will admit I've not been great because I've rode some stuff down. I sold 10 names that hit my targets early in January and February. I stopped out 5 or 6 names. I got to about 30% cash, but that's as my old boss says, you never sell enough. I mean, I was still 70% invested.
Adam, can you discuss a little bit of what goes into your upside targets, please?
Oh, good point. Good question.
Yeah, you bet. Well, since we're talking biotech, and that's probably the easiest because you can generally model, what cash flow might look like if a drug gets positive. It's always tricky to sort of say, well, how would you price it? But that's what you're trying to do. How many people suffer from this condition? How many of them are addressable or could be treated? What's a reasonable market share that the firm could capture of those people? And then what would they charge for that drug, per use? And multiply that out over, 5 or 6 years, discount it back. And now you have, in theory, what the total revenue stream would look like, and what multiple do you want to put on that revenue stream? And were there other takeouts of similar drugs, and or where are other biotechs trading? That do something similar. So that would be one solution. In the case of technology, it's a little less detailed, right? Because you don't have to create these elaborate models about how many patients are out there. So in the case of Lamentum, it's almost hard to say because facial recognition technology is something that's brand new. So how do you try to create an addressable market? Well, that's very difficult. So in a case of Lamentum, I'm more inclined to look at the current multiple, try to figure out what I would pay for a high growth stock, see if that aligns with some point on the chart, or if it's total uncharted territory, and just come up with what I think would be a reasonable goal over the next 12 months. On rare occasions, I will up my target, but generally, when a stock hits my target, I sell half the position and then I work the balance. So does that answer the question?
Oh yeah, absolutely. So you basically start with a TAM approach and then work your way down from there.
Yeah, that's right.
Okay, cool. Thanks.
Yeah.
What's TAM?
Total addressable market. Yeah. How big is this potential market? What market share could they potentially capture? And what would they charge per unit? So multiply unit sales by price per unit. Try to figure out revenue. What's a reasonable growth rate? Take that out a few years. Get total revenue over the next 5 to maybe whatever. Probably 5 years is enough. And then just discount it back to the present. And then put a multiple on that stream of revenue. Should it trade at 3 times, total revenues over the next several years, or 10 times, or and that's just looking at comps. Maybe some companies that were taken out. What was the deal multiple, or absent that, where are some of the other companies in this industry trading at currently, and should this be at a premium or a discount to them? Like, for example, I can look at Lamentum and say, that's crazy. This thing would historically trade at, what did we say, 16 times? It's trading at 11 times now. So we already know it's a discount to history. And they're number one in the business. No one else is doing it. 5G is just getting started on a build out. Oh, that creates some upside. You know what I mean? So you can start to kind of finagle it. It's not precise by any measure, but that's how I approach it.
We got a couple other comments. It's an excellent discussion, biotech, especially immunologic. Okay, so I can't speak today.
Immunological
Adjuvants.
Adjuvants. Innovations always follow pandemics, plus harnessing viruses as pharma delivers is already well on its way.
Yeah, that word is adjuvant.
Thank you.
Say again?
It's been a long couple of weeks.
Yeah, but that's a great discussion, Adam.
Oh, thank
Really
you.
useful.
Thank you. Well, I've always been a firm believer that 1 + 1 = 3. And if you get, a bunch of smart people together sharing ideas, that you come out with some sort of conclusion that you wouldn't have reached if you were just on your own. So,
Well, that's the beauty of this room is, we try to discuss stuff and we push back at Ira. People will ask you questions.
yeah.
And, we try to then look for opportunity.
Adam, I do have one question. Hello, my name's Matthew. I do have one question. Most of your picks seem like they're US based. What about any internationally based?
Yeah. Thank you for that. American ingenuity is my, yeah.
No, I understand. Yeah.
Yeah. Yeah. I mean, there's some great companies overseas, but, just American ingenuity. It's just, I don't know. It feels right to me. The amount of creativity, excitement, open doors, et cetera, in this country, it feels good and it feels right. And, like I said, they're great company. It's funny. I go on BNN, Bloomberg in Canada. I go on, they have me on like once every 2 weeks. It's amazing how many subscribers I have from Canada. And it's just because of BNN. And every now and then they kind of taunt me and they're like, wait, tell us again your underlying thesis, Adam. I said, you guys know it. I said, it's American ingenuity. I know it sounds funny to tell a bunch of Canadians that, I'm focused on American ingenuity because there's a lot of ingenuity there too. But, there are only so many companies you can follow.
Right. I agree with you. I mean, the immune modulators and biologics already are, well on their way. And, after pandemics or war, there's always great innovation. So there's a lot of potential there.
Yeah. Yeah. I mean, like if I'm not a futurist, but, if I were, I mean, I might start thinking about what it means when companies realize that they can actually still be productive from home. I mean, what if there's some new weird technology that doesn't entirely exist yet, where, you might have, in 20 years, it might be that homes are built that have separate rooms. It's a home office, and you walk in, and instead of hard, sheetrock over 2x4s, the walls are all LED screens, and you can create any sort of virtual environment in that room with all those, surrounded screens, so that suddenly you feel you are in an office or in a classroom. And there will be ways to effectively project other people onto those walls, so it'll be as though you're having a conference in a conference room, sitting in your one room, but everyone will I mean, right? Like, I don't know, there's probably some stuff like that, new technology that's going to start to develop, and we'll start to see the possibilities, of augmented reality because of this whole experience. Or, all these colleges sending kids home. Well, hang on. They're going to all now participate from home on iPads or computers. Oh, wait a minute. Wait, if we're a college, we could probably up our enrollment by 25% if we mandated that one of your 3 years has to be abroad in an interesting program, like some work study program elsewhere, and you'll do your classes online. Oh, we can get 25% more people in here, charge more, maybe even hold prices. You know what I mean? There are just going to be some things that come out of this whole experience, I think.
Yeah.
Great
Really
insight.
good stuff.
Yeah.
Great.
Here.
Opening up my thinking there.
Yeah, Josh Wolf over at Lux, very big on the augment reality stuff.
Oh, cool.
That's from a gentleman out of London.
Oh, neat.
All right, is anybody out?
Well, this is
Yeah, I was just going to add, Google is supposedly testing high fiber optics, and that will deliver pharmacy through the internet, and you'll have like the little O2 sleeve, like when they do your oxygen level, attached to your computer, and it'll like revolutionize chemotherapy because you won't have to go in. Basically, it will be delivered through the internet somehow. It's
Whoa.
fascinating. Yeah, it's really fascinating. And there's a German company actually working on holograms from a sexual standpoint. You'll be able to order up whatever your dream person is supposed to be. You know? But anyway, that's probably way out there in the augmented reality space.
Wow.
Yeah, you know, so it's possible. A lot of that comes out of
Oh,
DARPA, though. You know, the
hang on,
military.
guys. Hang on. Hey, Tony, it's Adam. Can I call you right back? Tony? Okay, sorry, guys. That is the gentleman who works here in the office with me and ran a very large fund of funds for many, many years. He's calling to basically have a similar conversation to the ones that we're having right now.
Well, you know, that's okay. I mean, Adam, we really appreciate your time and you coming in and discussing all this stuff with us. It's great.
Oh, thank you.
And we want to have you in more often because everybody loves this.
Oh, cool. Well, it's fun for me, and I apologize that I did all the talking.
No, we want you to do all the talking.
Yeah, they hear us talking enough, Adam.
Well, all right. Well, maybe next time I'll just come and listen, you know, because I'd love to hear your perspective. You know what I mean?
Okay.
Yeah.
Yeah. Well, you get mine every night in the DMI, and we talk.
Yeah.
Right now, we're still just, you know, full on trading mode, looking for opportunities. And, you know, we love people that come into the room and join in with us because that's where we get our best ideas from.
Cool. By the way, and then I got to go because I want to call Tony back. We didn't even talk energy. You know, I did trade jet fuel for 4 years at Louis Dreyfus, and I love talking energy. EOG is the single best run E&P in the world. They have very little debt. They have the best acreage, and they make 15% ROE with oil at $40. Obviously, it's a lot lower. If there's one to own, that's it. WPX has gotten crushed. It's down to like $2 or $3. It was 12 a couple of weeks ago. And Cheniere, LNG is the ticker, is the exporter down on the Gulf Coast. I don't know if you looked at those, Judd, but if you guys have any thought, it's probably too early on oil. But we didn't talk about it, and I wanted to mention it before I jump.
All right, I'll cover them tonight and I'll put it out.
Oh, cool.
All right. Well, thanks again. And Adam can be reached where at?
Yeah, AJ at Bullseye Brief. AJ at Bullseye Brief.
There you go, guys.
And if you want to see my website, it's bullseyebrief.com, you know, so find out.
And it's a great read.
Oh, thank you.
And you write what, twice a week?
Yeah, so I put out new stock picks every 2 weeks. And then on the off week, and this Sunday is an off week, I do a roadmap for the week ahead, what I'm watching, how I plan to trade. And then also on the off week, I do a Wednesday podcast. So new stock picks every 2 weeks. On the off weeks, a Sunday night roadmap for the week ahead and a Wednesday podcast.
Good stuff.
Cool.
Great. Thanks a lot, Adam. Everybody
thanks,
really
guys.
appreciated it.
Thanks for having me.
Adam, thanks for coming in. Truly, truly appreciate it.
Oh, thank you, Pax. Okay, bye.
Bye-bye.